Hello everyone, welcome to QuintEdge. This is CA FRM Jan. I hope all of you are doing amazingly well. I'm also doing pretty good. In today's video, we are going to learn how to prepare financial model from scratch. I'll not be assuming you know something. I'll start it from the scratch. I'll develop it step by step without skipping any step. So I'll request you also, if in case you're watching this on your mobile phone, go to your PC, shoot your Excel and parallelly start preparing financial model with me. Before we start moving towards the Excel part, let me give you brief about the case study. So it's a real life case study that I did few years back when I was working at an investment bank. So the project was, there is a very wealthy person who is having a very large piece of land. That piece of land is now located near highway. Now that piece of land can be utilized for leasing out, or that person can start his own business. The business that he proposed was starting a fast food franchisee, preferably McDonald's. So we wanted to take a decision for him whether he should be utilizing this land by giving it on rentals or whether he should be utilizing this land for starting franchisee business. So this is the context. Now go to your system and start with the Excel. See you on the other side. Let me give you brief background about this financial model before we move ahead. So I've worked on this financial model some years back. So it's a real life case study that I have modified for academic purposes. So I have changed some figures, have changed some name, but essentially the crux remains the same. So I've modified real life model or real life work that I have done into a case study so that we can enhance our learning experience. So the situation is, there's a person who owns a property, land and a building on top of it. This property was in middle of nowhere, but very recently government have announced a highway will be passing just in like opposite to this property, and because of which the value of this property have gone up, right, exponentially. So now this person is now like willing to utilize this vacant piece of property. So you've got two options. Building is there, land is there. So you can just lease it out to some other business and they can start like their own business over there. Okay, so first option is leasing the property. Second one, he can start his own business on that piece of property. He has inquired with McDonald's India, and McDonald's India have given them the permission that they are willing to go for this project. But before depositing whatever amount is and before committing McDonald's, he wants to be sure that whether he should be going for option 1 or he should be going for option 2. Okay, and that's why he have came to us. So as his financial advisor, we have to tell him which deal he should be accepting. He should be whether going for the business like McDonald's franchisee, or he should be like letting out the property. Okay, now some basic details before we move ahead. Originally this was a lot bigger, like the land size, but now for this case study we have assumed it's a 3000 square feet piece of land. 80% of it is the carpet area where building is there. So out of 3000, 2400 is the area on which building is constructed. So this land is 3000 square feet and building that is over here, that is 2400 square feet. Okay, the rate in this area for this entire property, land plus building combined, is 15,000 rupees per square feet. Okay, market rate. So 15,000 into 3,000 is 4.5 CR. 4.5 CR. Okay. Now, because very recently this highway is proposed, so the owner is expecting the property value will go up, that is capital appreciation will happen 13% per annum over the long term. Rental yield in this area is around 5%. Okay, So because the property value is still like is gone up, but still not matching what it should be once the highway comes, right? So rental yield is relatively high, around 5%. As the property value increases, slowly and slowly, rental yield will also go down. But right now it is 5%. And rental yield will grow by 8%. So let's say yield is 5%, property value is 4.5 CR. So annual lease rental is 5% of 4.5 CR, that is 22.5 lakhs. Next year it is going to grow and will become 22.5 into 1.08. And like this, it will grow each year. Okay. Now, if the person gives this property on rent, he will be asking for some security deposit. The deposit amount that he will be asking is 50 lakh rupees. Now, he will be keeping this 50 lakh rupees in a fixed deposit of 6%. The tax rate applicable is 25.17%. This is the tax rate applicable on companies, corporates in India. And we are in mid of February when I'm recording this video. So it will take him around 1.5 months to find a tenant and start the leasing. So he's expecting the property can be let out on 1st April 24. And from this date, like the tenant will occupy and he'll start like paying the rentals. Okay. This is first option. Okay. Very much comfortable with this. Now, second option is starting a McDonald's franchisee. Lot of details are there. We will go through these details as and when required. Okay. But what I've done is so that we can finish the first part of analysis of leasing the property and then we'll move to McDonald's. I've created one Excel sheet. Okay. And in this Excel sheet, this input data is available. That is exactly the same data that we just read. Property value is 4.5 CR. This one. Then land size is 3000 square feet. Building is 2400. Rental yield 5%. Increase in rental yield 8%. This is all per annum. Okay. Rent deposit, FD, and income tax. So using this, we can analyze the rental yield option. Then we'll move ahead. We'll start putting down the business model of McDonald's franchisee and we'll see later. So I need to start by creating a playground where I can play with this model. So we are going to start from the scratch. Now, as usual, I'll request everyone. This is the mouse that I'm using. I'll put it on the side. So if I have to use Excel, it is going to be 100% based on keyboard. There will be few instances where I have to explain something by pointing out. In that case, I'll be using mouse. But other than that, 95% of the time, I'll be only using keyboard and I'll be telling you shortcuts, right? How to do that on keyboard. In Excel, you are not supposed to use mouse if you have to work like maybe 5, 6, 7 hours on a day on Excel because it decreases your efficiency. Going to a particular cell, clicking it takes a lot of time. This could be relatively like this could be done much faster when you're using keyboard. So there is a reason like some students, especially those who are part of investment banking, sometimes becomes annoyed that why he is forcing us to use keyboard. And simple reason is if let's say using Excel saves you 15% of the time, 10 to 15% of the time. So if you are working in investment banking, you'll be working 10 hours in a day on an average, out of which Excel will be good, maybe 60%. So 6 hours in a day, you will be working on Excel. And out of this, if you're able to save 15%, in one day, you are able to save 0.9 hours. That is approximately 50 minutes. If I see compounding impact of it, you're working 22 days in a month, assuming you don't work on weekends. In a month, you are able to save 20 hours. So that 20 hours, maintain work-life balance, be more efficient, ask for raises. Okay, anyways, so that's why we'll not be using keyboard for the purpose. Okay, we will not be using mouse for the purpose. Now I need to prepare this. Okay, so as usual, we'll be starting by creating the formats. I need to like insert couple of sheets over here. I already have one. I need to insert more, right? So you have to press Shift and F11, Shift and F11, and insert a good 7-8 sheets. Okay, I've inserted these sheets. Now I have to rename all of them. So one way is I take my mouse and name it as maybe rentals, like this. It's going to be tedious process. You have to do it multiple times. So what you will be doing is go to next sheet, control and page down key together. Then Alt H O R, Alt H O R, R for rename. Alt H O R, rename the sheet as revenue. Enter. Then control page down, Alt H O R, rename the sheet as P and L. Enter. Control page down, rename the sheet as fixed assets. Alt H O R, Alt H O R, fixed assets. Control page down, Alt H O R, balance sheet. Enter. Control page down, Alt H O R, name the sheet as cash flow. Enter. Control page down, Alt H O R, name the sheet as McDonald's franchisee. Control page down, Alt H O R, name this as output. I don't need this sheet. So in case you have not inserted it, it's fine. But in case you have inserted it, you can delete it as well. Okay. And I've used mouse to delete it because it's not a repetitive process. Okay. Now I'll go back to my first sheet. Input. Okay. Everyone do this. Take your time. Feel free to pause the video. Just try to follow what I'm doing. Don't use mouse. Okay. Now I have to create a stack of sheets. I'm going to do basic formatting. So I would want the same format across the sheets. Number formatting, width of a column, height of a row, all these things. So I need to stack these sheets. Now in this case, I have to use mouse. There is no other way. At least something that I am aware of. There is no other way. Okay. So you have to press Control key, go to rental sheet, press Control key, and click on all other keys except the input key sheet. Okay. So other than input sheet, you have to keep on pressing Control key. Don't lift your finger. Keep pressing it. Keep pressing it, and click on all these sheets. You'll see all of them are selected. All of them are selected, right? Basically, you have stacked one sheet on top of another. Now all these sheets are unified, and now whatever you do on the sheet that is available in front of you, it will automatically be applied, copied to all the other sheets. Okay. Perfect. Till here. Amazing. Now I need to start formatting the sheet. A column, generally we will be writing a lot of text over here. So I want it larger. So Alt H, Alt H O, and then width, column width, W for width. And this is right now 8.43. Move it to 30. Okay. Then B, C, D, E, F, G, H, all these columns. Alt H O W. This is 8.43. Make it 12. Okay. I'll write here particulars. 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 Right. Now I'll select this area. I would generally want to highlight this area, right? So that the top is visible very distinctively in the entire Excel model. So firstly, I'll bold this, Control B, and then I would want to color this. Color this using some not so fluorescent, some corporate-ish color like pastel colors. So Alt H H, Alt H H H H, and then select any color of your choice. I would want to go with this blue color. Looks good to me. Okay, perfect. Now right here, ear, ear. Okay. Now we need data over here. So this is going to be 0, then 1, then 2, then 3, then 4. Let's start and insert one more column over here. So I'll right click, insert column, 4, and then 5. Okay, 0 to 5. These are years. So I want them to be visible as years. 0, 1, 2, 3, 4, 5 doesn't look really good. So control key, do it. Control and one key, one. Control and one key, press it together. This menu will pop in front of you, right? This is format cell. Press tab, down arrow, tab again, go to customs and tab again, and write it like this: year in inverted quotes, space 0. What is happening here is we are saying Excel show this text YEAR, whatever I'm telling in inverted quotes, and then show number, whatever number I give. Number is represented by 0. And I press OK. Now see, in formula tab, this is visible as 1. But on Excel sheet, it is visible as year 1. Okay. This is done. Easy. Okay. Now I need these year ends, like when is first year ending, second year ending, third year ending, fourth year ending. So equals to, without pressing equals to, you can't go to the sheet. Equals to control page up, and select this 1st April 24. This is T0. This is where we are starting. Okay. If you do it, if you go to previous sheet without pressing equal to, this clubbing of the stacking of sheets will go away. So you have to make sure you press equals to, then only you do it. Then you have to use a formula called as EO month, end of month. A trick question: how many months are there in the next financial year end from the end of April? From end of April. Answer is 11, not 12. End of April. EO means end of April, end of month. So from this month, I would want to move 11 months forward. But I'm not getting date. What happened? It's just formatting issue. So select all this, Control, Shift, and 3 key. Don't use the numpad. Hash the 3 key that is just above your W key, W and E key. Press it. That 3 key with the hash symbol, that means you can use this to format for dates. Okay, so the formatting is now changed. Now, from 31st March 25, next financial year end is after how many months? From end of March, how many months? 12 months now. So I'll copy this, paste it here, and we'll make this as 12. Now I can copy this, and paste it here. Okay. Perfect. Okay. Now I'm going to get numbers over here. Now if I write number right now, let's say I write 50 lakhs. It's not visible in accounting format. They are just plain numbers. I want like commas and all. Like when I write maybe some amount on check, or when we are preparing books of accounts, if you are from commerce background, we emphasize too much on the commas where you are putting it. It becomes easier to read such large numbers. Someone might get confused whether it is 50 lakhs or 5 crore, right? So we need numbers over here. So there is a shortcut to it called as Alt HK. Alt HK. Don't worry if you're seeing this as hash hash hash, because the data is too large for this to accommodate. But we don't want like 50 lakhs and 50 lakh 10 paise. It doesn't really matter, right? So Alt HK, then Alt H 9, Alt H 9, Alt HK, Alt HK, then Alt H 9 and Alt H 9. This will solve the problem. Now it is visible properly. I want each cell to be visible like this. So I'll select from here, Control Shift down arrow till the end. It's okay. Even if you format till the end, I'm not going to put data in 10,48,576th row. But anyways, I'll do it. Alt H K, Alt H K, Alt H 9, Alt H 9. Okay. Alt H K, Alt then H then K, Alt then H then 9. Okay. Alt H 9. Delete. Okay. Perfect till here. No problem. All good. Okay. Now we are done with the basic formatting part. Okay. Now, one thing that is my personal preference, if in case you don't want to do it, don't do it. But I just don't like seeing these grid lines, like these grid lines. So I want to remove them. Alt W V G. Alt W V G. So view grid lines and you disable it. If you want it, Alt W V G again, you will get it. Okay. Perfect till here. Now we are done with the formatting part. The look and feel of the slide is set. Okay. Now we can play around and put in the actual figures. I need to unstack the sheet before I start putting in the data. Otherwise, my rental data will get copied into revenue. So what I'll do is I'll press Control and page up without pressing anything equal to etc. Now the stacking is gone. See, stacking is gone, right? Now if I go to any sheet, you'll see each sheet looks the same. Okay. So now I'm done with the basic formatting. Basic formatting. Now, firstly, I'll be dealing with the rentals part. I have to calculate rate of return, IRR. Okay. Now, I'm going to give property on rent. So what will I get yearly? Rent, right? Rental income. Other than this, there was also one fixed amount that I was receiving in the form of rent deposit, and I was putting it into FD, and then FD will generate interest for me each year. So interest income, right? Now deposit, it is written over here. Deposit is non-refundable. Income tax considers non-refundable deposit as your income. It's not deposit. It's your income, right? Deposit something that you have to return back. This is not returnable. It's non-refundable. So this will also be my income for the first year. Non-refundable deposit. Okay. This will become my total income. Okay. Then on this income, I will be paying taxes, less income tax. This will become my income net of tax. So I'm calling it as total income before tax. and this will become income after tax. Okay. Then anything else I'm forgetting? Okay. No. Okay. Great. I am, but I'll not highlight it right now. Now I need to make it look and feel good. Alt HBP. Alt HBP. Border on top. Border on top. This one also. Alt HBP. Border on top. Now it looks good. Presentable. Okay. Now let's start by putting in the rental income. Okay. So rental income, I'm just directly punching in the numbers. Firstly, is 4.5 CR. On that, yield is 5%. Okay. This is coming as 22 lakh 50,000. 22 lakh 50,000. And this will grow at 8%. Like this. Okay. I want these figures. I want these figures. But the challenge is I will put one single formula in a row and then I'll drag it. I cannot do it when we are preparing a financial model. For 99% of the time, like for 100% of time, in fact, you should be following this, that I'll prepare one formula for one row. Otherwise, if someone wants to update, they have to change this figure, then this figure, then this figure, then this figure, then this figure. It becomes really difficult. So one formula for one row. Okay. Now you have to think about this Excel formula. Basic formula is ready. Basic formula is ready. But when I copy it here, it should be 0, right? It should be 0. So I need to create a formula, something like this, that it grows also each year and becomes 0 if in case I have not given property on lease rental. On the very first day, he's not going to give me 22.5 lakhs, right? So I'll build on top of this only. Okay. So I'm just firstly creating this equals to control page up 4.5 CR into this 5%. And I'm going to fix this F4 and F4. Enter. Now I want it to grow over the previous year's balance, right? So this is one thing. Give me this, or previous year balance increased by 8%. So I'm going to say, give me max of this balance or previous year balance multiplied by 1 plus control page up this 8%. Fix it, bracket close for max, enter. Copy, paste. It works well. But if I copy it here, still it's going to give me value. That's not right. So I need to again make some changes in this formula. I need to give it a prompt, command that once I've given property on rent, then only start counting in the rentals. So I'll say if this date, and I fix the row is more than, if this date is more than this date, 1st April 24, I fix it. Then give me this, but if it is less than, then give me 0. Okay, more than and equal to should be there. Okay. And I'll press enter. Okay. Now let's try to solve this. Copy, paste. I'm getting C 0. Now I can copy and paste this formula. One single formula now that I just created. I can copy and paste and it should give me the answers, right? Now if it's not done, but if required, but if I just copy paste it over here, I'll get next year data as well, right? This will become 6th year data. Okay. Okay. Perfect. Yes. We don't need it for 6th year. Now, interest income, interest income, interest income. Interest income will be 6% of the deposit. 6% of the deposit. And deposit is 50 lakhs. So let's put down the deposit first. Deposit I'm going to get over here equals to equals to equals to oops equals to control page up this deposit, enter. This is the deposit and I'm going to earn interest income. Interest income will be, I'll be again using this formula over here, equals to, if my interest income will start only when I've received deposit, I'll receive deposit when I've given property on rent, right? If this date I fix the row is more than equals to this date, I fix it. If this is the case, then give me this 50 lakhs into 6%. I fix it. Otherwise, give me 0. Okay. Enter. So I'm going to receive 3 lakhs. Now you can consider the compounding impact as well. Like I'm not withdrawing this money and on each that like on for each year I'm getting like 3 lakh. Firstly it was 50 lakhs, then it becomes 53 lakhs. On that I'm going to get interest. You can assume that as well. In that case, this will increase. So I'm keeping it simple, just 3 lakh rupees each year. That means we are receiving this 3 lakh rupees amount each year. Okay. This becomes my total income equals to sum of this. Okay. Now less income tax. If I'm going to receive deposit on 1st April 24, will I pay tax on 1st April 24? No, I'll pay tax on like last, like once this particular 24-25 is complete, right? So my tax liability will be this balance multiplied by 25.14%. Enter. This is all tax that I have to pay on these regular incomes. But this deposit also is non-refundable. On this also I have to pay tax. So I'll say plus I need to put one formula. So I don't want this 50 lakhs coming again and again. Plus if this date, or you can say non-refundable deposit, just link it over here. Just link it over here. Plus this non-refundable deposit into 25%. I fix it, bracket close, enter. So my first year tax liability was 6,41,000. Now it becomes 19 lakhs because my total income for this year is 2550. 2550. Okay. Copy, paste. It's fine. It's fine. Okay. Then total income after tax will be this minus this. Okay. First year, it's going to be big blow off if you just look at this 6,49,000. But your true income after paying taxes and all is 56,49,000. 50 lakhs coming on the very first day, and then 25 lakhs minus 19 lakhs, that is net and net 6 lakhs, other part of the year. Okay. So this is how it looks like. Are we comfortable with this till here? Now tell me, will my rental income Will my interest income stop after fifth year? Answer is no, it will not stop. Okay. Now we have to learn about a very important concept. Let me explain it to you first before we try to put it into Excel. So the concept is of terminal value. Firstly, let me tell you the meaning and then we will discuss various ways to calculate it. Terminal value. See, by terminal value, we mean is value of all the cash flows that we are going to receive in future today. Okay. So my lease rental is not going to stop over here. It will continue like this, right? So I need to calculate value of all the future lease rentals today. Sir, why can't we forecast this? Like how long? 5 years, 10, 15, 20? How long will you forecast, right? So we have to calculate terminal value in all the models. So how do we do it? Finance cannot do it. We take help of maths. So exactly what is happening is this is going to grow. Currently, let's see the growth rate. The growth rate is around 7%. Last year also, let's check. It was around 7%. So the cash flow will continue to grow at 7% over very, very, very long term, right? So it is like we have learned APGP series, arithmetic geometric progression. And in that we had sum of infinite numbers, right? Adding, let's say 2 by 3 till infinity, what will be the value? APGP series. So it is also a geometric progression that is growing by 7%. So we can take help of mathematics and arrive at this value. This is terminal value. Okay. So terminal value. Now let's learn about the ways to calculate terminal value. Terminal value can be calculated using two broad methods. One is Gordon growth model. We are not concerned with this right now. Later down the line, we'll learn about it. Another one is exit multiple. This exit multiple basically means if I have to sell this land on this point in time, like at the end of fifth year, the sale value will be equals to present value of all future cash flows, all future lease rentals. So we have to calculate value of property over here. Think about it. Why would someone pay you this amount? Because over the period, he would be expecting to earn in the form of lease rentals. Whatever he is going to earn in future, the present value of it will be the amount he is ready to pay, right? So those who are new to field of finance, for them, terminal value might be bit intimidating, but think about it logically. It is 100% correct. In all the valuation models, we calculate terminal value. So what will be the value of property at the end of fifth year? We can calculate that. I'll say equals to control page up 4.5 CR multiplied by 1 plus this property is growing at 13%. So this 13% bracket close, right? And raised to the power 5 alt h k alt h 9 alt h 9. So this property of 4.5 CR on 1st April 24 will be 8 crore 29 lakhs 9,000 something. This is terminal value. Okay. I'm going to add it up together. This is going to be my free cash flow to equity, FCFE. That means this is net earnings or net cash flow to equity. This plus this. But now the question is, how do I calculate returns? These are just inflows, inflows, inflows. To calculate return, you need outflow, investment, and then you earn on it. Here, there is no investment visible to us. So there is no investment. We already own the piece of land. There is. Again, try to think about it. I have this piece of land. I can sell it or I can hold it. If I hold it, two uses are possible. I lease it down or start my own McDonald's business. So I have chosen this path. So I have said no to earn 4.5 CR. This is opportunity cost. So we have to consider this. That's why we left one row over here. I'll write here opportunity cost. That is purchase of land. Equals to, with a minus sign, page up this 4.5 CR. I'll just simply add this over here. Copy, paste, Alt-H BP, Alt-H BD. Okay. Now I have to calculate rate of return, IRR. Alt-H, and I'll give it some bright color. If someone is like looking at this, their attention should be immediately drawn towards this final calculation, rate of return. Now we can calculate rate of return. We can do it manually, but Excel, there is a formula available to us. That formula is called as IRR, internal rate of return, equals to IRR, or you can also use something called as XIRR, XIRR. Values, these are the values. These are the dates. Bracket close, enter. Sir, 0 is 0 R return? No. Alt HP, Alt HP, Alt H 0. 19.2%. I can give you breakup of this 19.2%. Before even solving, if someone is really good with finance, they should be able to like gauge this number. So let me give you breakup of this, how this is calculated. Your property is growing by 3%, 13%. Plus rental yield, you are earning 5%, right? This is 18. And other than this, remaining 1.2%, this is effect of compounding plus the interest that you are earning minus the tax that you are paying. So like these are very minute figures, but if someone is analyzing it without even preparing this table, that person could have said you are broadly making 18%. If you bring in the impact of compounding, taxation, and that interest part, it is becoming like around 19.2%. Okay. So I'm earning 3 lakhs with the base of 4.5 CR. That is contributing to 0.7% over here. So 13 plus 5 plus 0.7, that becomes 18.7, and then compounding impact and taxation. That bifurcation, I cannot do it readily. We need to like do some mathematics for it. Anyways, it's not required, but it's like it's just good for our understanding. So this is done. Okay. So we're done with the rentals part. Now we have to go back to McDonald's business, right? We're done with rentals part. Now I need to compare it with McDonald's franchisee. So a lot of other details are given. Let us start reading this. This franchisee will also start on 1st April 2024. Expenses to recognize or start franchisee is taken from this website, dalchini.co.in. Here it is. Franchisee cost, civil work, furniture, development, machine, etc. So I've taken cost or higher side. If it is 20 to 30, I've said 30. Okay. Like this interiors, training support, etc. It's taken over here. Franchisee cost 30 lakhs. Civil work 10 lakh. Civil work is modifying the building. Furniture cost 11 lakh. Development cost 50 lakhs. Machine cost 35 lakhs. Interior cost 20 lakhs. And then depreciation and all is like depreciation of furniture, fixtures, development, machinery, interiors, etc. It is coming as 5%, 10%, 10%, 15%. So for all this, you can say broadly the cost is between or the depreciation rate is between 5% to 15%. Okay. Then this is the most important part, revenue. Okay. So size of the building in which we are going to operate is 2400 square feet. Out of that 2400 square feet, 30% will be kitchen area, that is almost 700 square feet. 10% will be store area, almost 250 square feet. Washroom will be 3% of the area, that is almost 72 square feet. Reception will take 50 square feet. Balance area will be for you and me to sit. So table chairs will be installed. Moving area will be there. Almost 1320 square feet, the balancing figure. This is called as serving area, serving area. Okay. Then on an average, there will be few tables on which 6 people can sit. There will be few tables on which 2 people can sit. On an average, the table size is of 4 people. So at a time, 4 people can enjoy their meal. Very normal, right? Per table, square feet needed is 50. That means if let's say this is the table, there will be 4 chairs installed and there will be some moving area around all 4 sides. So this will be in total 7 square feet by 7 square feet approximately. So 7 into 7 is 49. We have taken 50. So 50 square feet per table is required. So we have 1320 square feet area available. 50 square feet is needed for one table. So total will be 26 table. We can install 26 tables. Okay. So there are 26 tables. These 26 tables, 4 people can sit. So total is 104. So the capacity of this McDonald's franchisee that is built near highway in our own building is around 104 people at a time. So almost 100 people can sit at a time. Okay. So this is how much we can accommodate in one go. Then APC. APC is average per customer. On an average, one customer will be creating a sale of 235. APC, average per customer. Sir, from where you got this data? I've taken it from this. Few years back, Burger King India came up with their IPO. So Burger King is nowadays known as Restaurant Brand Asia. So I went to their DRHP in this page number 118. This one, you can read over here. APC is McDonald's around 225 to 250. I've taken somewhere in middle. Yes, these are pre-COVID estimates. So make maybe 10-15 rupees adjustments to this. But on safer side, I am always pessimistic about revenue and optimistic about expenses. That's why we have taken it on the lower side. Okay, although we can make it 250, 255, 260 as well. Okay. Okay. So APC is around 235. Then annual growth rate. So because of inflation, this 235 will grow by 5%. Next year, it will become 235 into 1.05. It will keep on growing like this. So I've considered average inflation is around 5% for McDonald related products. Okay. So we are open for 14 hours. So like 10 a.m. to 12 p.m. Okay. So 14 hours, the restaurant is open. Number of hours serving in a day is 14. And turnaround time. That means, suppose this is a table, it is occupied by 4 people. They came, gave order, they got their order, they enjoyed their meal, they had chit chat, and they leave, and someone else will come and occupy it. It will take around 1 hour for this, right? So my tables can be utilized 14 times in a day. So total number of rounds. This is called as round. So one person coming and leaving. That in the language of restaurant is called as a round. So that is 14 rounds we'll be having in a particular day. Now occupancy, it is near highway. So it won't have lot of occupancy like it would have in maybe middle of a particular city. We'll start with very low occupancy, and occupancy will change as the traffic on highways changes. So on weekdays, occupancy will be lower, and on weekends, occupancy will be slightly higher. Occupancy is around 38%, and this is expected to grow by 4% each year. So 38 initially, next year will become 42, next year will become 46, and maximum I am expecting it will reach around 50% on weekdays. Weekends, it will grow slightly at a better rate. 45 will become 50, 50 will become 55, like this. It will reach 60 and will peak out. So, like some part of the day, like maybe 10 a.m. to 1, hardly 10% occupancy will be there. But 1 to 4 during lunchtime, maybe 90% occupancy is there. Then again, lower occupancy. And then in the evening, maybe slightly higher occupancy near dinner time. So on an average, throughout the day, we'll have 50 to 60% occupancy. Now, since this is based on highway, so no lot of online sales. Whatever the sale is, only 20% of it, whatever is my outlet sales, 20% of that will be my online sales, right? So whatsoever residences are there near that particular highway, they will order, okay, within some limited kilometers. Now operational details are given. So we don't need to read these operational details right now because we will be calculating revenue. Okay. Revenue sheet is the most important, not even the second most important, the most important sheet in your financial model. Okay. So let's start creating revenue sheet. I don't need this. I don't need this. Okay. Let's go back to Excel and let's start creating it. Revenue. So firstly, I'll prepare a column. total number of operation days. These are the days I'll be operating. Out of this, how many are weekdays and how many are weekends? Okay. Then occupancy. Occupancy will be different on weekdays and weekends. Weekdays and weekends. Right? This will give me total occupied. So I can have my total capacity. It's going to be the same. Total capacity. After total capacity, if I have occupancy of, let's say, 38%, total capacity is 104. So I can calculate total number of visitors or total number of customers that I have in a particular day. That will be simply this into this. This is my number of customers. This multiplied by APC will give me revenue per day, right? So let's calculate total number of people visiting outlet per day. Okay. So weekdays it will be different, weekends it will be different. Okay. Then I'll have number of rounds also, right? So I have 104 capacity, but I'm having 14 rounds of it. So I'll write here total number of rounds. Total number of rounds. Okay. With this will give me total number of visitors per day, customers per day. Let me call it as customers. Okay. Then APC. APC. So basically what I have done is, everyone focus. This is quantity. This is price. Quantity into price will give me sales. That's what I wanted. Okay. After getting my APC, I can calculate revenue per day. Revenue per day. And this will be divided into outlet revenue. And then there will be 20% of outlet that is online of weekdays and weekends. Right? This will give me total revenue per day. Total revenue per day. This also I can calculate weekdays and weekend wise. Then let's move ahead. And after this, we can calculate annual revenue. Annual revenue. And this annual revenue, I'll be calculating outlet wise and online. Okay. No weekday, weekend basis. Why like this? We'll explain in some time. So this is the basic format that I needed and I have it. Now I have to start putting in the formulas. Okay. Let us start with this. total number of operational days, total number of operational days. So, okay, so operational days, see, I've not operated, it will be 0 over here, 365, like this, right? So I have to create a dynamic formula for this. So I'll insert a formula over here and we'll have to copy paste it. And I have to make sure, let's say instead of 1st April, okay, so I have to create operational days over here. Days I have operated is 0 on the first year, like 0 in at time 0, and then 365 days across. Okay. So 31st March 28 is leap year. It doesn't, one day will not contribute anything significant to your decision making. Okay. So we are saying we need this one single formula that I'll create over here. I'll copy paste it and I should be getting the same answer. And I have to make it dynamic. What if this project gets delayed by maybe 1 week or maybe 1 month? I should be able to accommodate that. Okay. So let's say if I start this project instead of 1st April, it gets delayed by 6 months and starts on 1st October. This should change to 180, 181, 182, whatever the days are. Okay. And then remaining should be 365. Let's try to create a formula. I'll say give me minimum of, minimum of, minimum of this. I freeze this row minus the start date. I fix it and plus 1. Okay. Why plus 1? Because when we start counting from 1st April, instead of counting it from the 1st April, it starts counting from 2nd April. That's why plus 1. So give me minimum of this or 365. Okay. And if I copy paste this formula, it is showing some problem because we have forgot to freeze this. Let me freeze it. Now it should work. If I copy paste this formula, yes, it's working. But if I copy and paste it over here, it's showing me negative 182 days. Days can't be negative. So I need to make it 0 over here. So I need to put a condition. If this D2, if the start date is more than, if this year end date is more than this start date, I fix it. If this is the case, then give me all this. If this is not the case, then give me 0. Like if I have not started the project, there's no operating days. Now if I copy and paste this formula now, it will be 0. Copy, paste. It's working perfectly fine, right? Now next, weekdays. Out of this, let me change it back to 1st April. Out of this 365 days we have, how many are weekdays? How many are weekends? There's no need to manually calculate it. There is a formula in Excel called as net work days. Net work days. It is asking you what is your start date? What is your start date? This is my start date. What is your end date? This is my end date. There's no holidays in between. It's a restaurant on highway. So holidays, we don't need to enter anything. Bracket close. Enter. 261. Copy. Paste. Okay. Perfect. Then weekends, simple. This minus this. Okay. Now, if I copy and paste this formula over here, he's giving me some figures. That's not right, right? So I need to put if condition over here. If this date, I fix it, is more than this date, then only apply network days. Otherwise apply 0. copy, paste. Now it is working. Copy, paste, and copy, paste. This is now working perfectly fine. Now we need to calculate occupancy. See, it's not that I have memorized any formula. In fact, I am doing this model after like lot of months. But I can create formula because I've practiced Excel from last many years. And that's what I would also want. By the time you finish this, you develop the way in which how we think and create formulas rather than you try to mug up any formula. Okay. Now I have to calculate weekdays occupancy. Okay. So answer is, if I go here to input sheet, occupancy is given. It is 38%. Let me convert it into percentage. Alt HP, 38%. It will grow by 4%. Okay. And it will freeze at 50. Okay. It should not become 54. It should freeze at 50. And weekends occupancy was 45%. It will grow by 5% and will freeze at 60. So I need to put a formula for this. Okay. And here we should be getting 0. Let's try to create a formula. I'll say this is where my starting point is. So give me maximum of this or maximum of this or last year balance plus 4%. I fix it, bracket close. And if I just deploy this formula, it works well till here, but will not freeze at 50. It will go beyond 50. We need to stop it at 50. So I'll say, give me minimum of, as soon as it goes beyond 50, stop it at 50. So give me minimum of this figure or this 50, maximum occupancy. F4, bracket close, enter, copy, paste. It's working, right? It's working, right? Now, if I copy paste it over here, it changes. So I need to take care of this as well. So how do I do it? I'll again put if condition over here. I'll say if this date is more than this date, 1st April 24, then only do all these things. Otherwise, make it 0. Enter. If I copy and paste it over here, it's working now. Copy, paste. It's working, right? Perfectly fine. Now I need to create formula for this. I would really want you guys to pause this video, create formula over here, same way we created above, and then drag it across. Please do it. Please do it. Pause the video, pause it, don't skip, pause it. Okay. I'm assuming that you have listened to your teacher and you actually paused the video. In case you have not done it, actually I am helpless. And anyways, I'll tell you a trick to do all this. Okay, I'll copy this formula. I'll paste this formula here. And now I'll adjust all these things. Okay, this should become this. Input B15, that should be fine. Input B54. This should change. Let's go. And B54 was 38%. This should change to 45%. I fix it. B55 is 4% should become B58. And B56 is 50% should become 60%, 59. Enter. Copy, paste, copy, paste. It's working. I'll just remove this. Alt H N. Alt H N. Okay. Done. Now total capacity. Total capacity. It's going to be 104 from the day I start operating. If this day is more than this 1st April 24, that means I've started to operate. Then give me 104, otherwise give me 0. Enter. I have to freeze it. Copy, paste. Number of rounds, same formula can be applied. Just B45 will change to some other input. Let's go and check what will be the input now. It will become this 49. So I'll go here, we'll paste in the formula, and 45 will become 49. Enter. Copy, paste. So total number of customers per day. Think about it. What will be the answer? If my capacity is 104 and 38% of it is occupied. So in one round, 40 people are there. In one round, 40 people are there. And I'm hosting 14 rounds in a day. Enter. So 553, right? I need to freeze this row and this row. Okay. I'll copy this and paste it. So almost 700 people by the end of 5th year. I'm starting from 550 people, and on weekends I'm starting from 655 people, almost 900 people. So almost 900 people in a day. Yes, that's how QSR operates. APC is very easy to calculate. APC is 235 and it should increase by 5%. So this into 1.05. It will continue to happen. After 5th year, inflation is not going to go away. Occupancy will restrict, but inflation is not going to go away. It's very easy to create. If this date is more than this date, 1st April 24. If this is the case, then give me maximum of 235 or previous figure. If I'm applying formula in C19, previous figure will be B19 into 1 plus this 5%, bracket close for if, otherwise give me 0. I have to close one more bracket over here. Okay. Enter. Copy, paste. I forgot to freeze this part. Enter. Copy, paste. It's working perfectly fine. Normal. Now we can calculate revenue per day. How much it will be? On weekends, 553 people are coming and one person is spending 235 rupees. So I'm making 1,30,000 rupees in a day. And this will grow to 2,07,000 rupees in a day. And when I'm not operating, obviously it will be 0. I can even copy and paste this formula here. Now weekends, 655 people are coming and they are spending 235 rupees. Copy, paste. Online was 20% of my daily sales. It's simple. Whatever this sale is multiplied by online as a percentage of sales, 20%. Enter, copy, and I need to fix this part, paste. And weekends, whatever is my weekend sale multiplied by this, F4, enter, copy, paste. Okay. So total revenue per day, it's easy to calculate. Whatever I am making via outlet plus whatever I am making via online. Almost 1.5 lakh rupees sale in one day on weekdays to 1,83,84,000 on weekends. Okay. Now I can calculate total sales of the year. Let's bold it. Now, do you notice I can't see the top area, right? Again, I need to scroll up. There's a solution to this. There is a fix to it. Go to this cell, and press Alt WFF, free space. Now, even if I scroll down, this data will be visible. Okay. Now, let us calculate annual revenue. We can divide this also into annual revenue via outlets with the bifurcation of how much is coming on weekday weekends, via online with the bifurcation of weekday weekends. We can put here total outlet sales. And total online sales. Okay. So let's do it. Weekdays, this is how much I'm making, right? Weekdays pay. This is how much I'm making. This amount into number of weekdays, 261. Weekends, this is how much I'm making by outlet into number of weekends. Enter. Total outlet sales will be this plus this. Copy, paste, copy, paste. Okay. This is my total outlet sales. Now online sales, I can calculate this as 20% of above, or I can say this multiplied by total sales online on weekdays multiplied by total number of weekdays. I'll copy this, paste it. Weekends also, this total sales online multiplied by number of weekends. Enter, copy, paste. Total online sales is this plus this. In fact, I can copy this with format and paste it. Done. Total sales for this entire year will be whatever I am selling via outlet plus whatever I am selling online. Copy, paste. I have to give it a border. Alt H B D. Alt H B D. Okay. I just want to check growth rate. How my sales is growing. We generally tend to write these things in italics, and maybe we can reduce the font size as well. So the shortcut is Alt H FS, Alt H FS, and maybe 9. Okay. I'll select this Alt H FS 9. Enter. Let's calculate the growth rate. Closing value by opening value minus 1. Alt H P. We're stabilized at 5%. Sir, why 5%? See, this is where the quantity have peaked. Look at this. The maximum customer that I can achieve is already achieved, right? In fourth and fifth year. Now, fifth year, quantity cannot grow. What is going to grow is this price. And growth rate of price was 5%. APC was going by 5%. So it is visible over here, right? No surprises. I'll convert it into italics. Okay. So with this, we are done with our revenue sheet. Now let us move ahead and let's jump to profit and loss account. Okay, now we are done with revenue. Now let's move ahead and prepare P&L. Firstly, let us post revenues over here and then we'll move to other things. Sales, outlet, and online. Equals to, I'll go to revenue sheet, total outlet sales, then total online sales equals to this one. Copy, paste, total sales equals to sum of this. I'll draw borders. Okay, this is done. Now let's start reading the case study and let's put other details together. I've taken these operational details from this website, Dalchini. These are given royalty, advertisement, etc. etc. I've also used the previous DRHP that we saw earlier. Like it is given over here. Cost of goods sold is 34-36%. Margin is 64-66. Advertisement is 5 to 6. So obviously I'll trust this over over Dalchini. And then we have royalty 4 to 5%, but it is given with stars that it will become 8% going forward. So I've considered 8% only. Okay. So let's start putting in this data. Sales, advertisement, royalty, and commission. Commission to food aggregator will only be payable on online sales, right? We're going to do some online sales, so Swiggy, Zomato, etc. We have to pay the commission income. Less direct cost, COGS, commission to food aggregator, then royalty and advertisement I'll put as a part of indirect cost. Total direct cost, this will give me gross profit, and this will give me gross margin. This sales multiplied by 36% is my COGS. Online sales only multiplied by 4% is my food aggregator commission. Total direct cost, this plus this. QuintEdge BP. Gross profit, sales minus direct cost. This is my gross profit. I can calculate my gross margin in italics and smaller font size. Alt-H FS font size is around 9. This is going to be in percentage. Equals to GP by sales. There's around 63.3%. Royalty and advertisement cost. Sales multiplied by 8% for royalty. I fix it. And advertisement cost, whatever is the sales multiplied by 6%. Some formatting issues, so I'll just format painter. I'll select this, copy, paste. I'll write here indirect cost. Then let's see other cost as well. So this is very important. We will have 2 shifts. So you cannot ask one person to work for 14 hours in a day. It will be 2 shifts, 8 hours each with 1 hour, 1.5 hour of overlap. So this is how the employees will be hired and they will grow. So you'll have cleaner, support staff, accountant, and store manager. This is how cleaners will grow from 2 cleaners 1 shift to 5 cleaners in 1 shift. Support staff, accountant, store manager will grow accordingly. This is the salary of cleaner, 20,000 rupees per month. Support staff means the person who will be on reception, the person, these people also at McDonald's help you in preparing the meal. They also like manage the inventory, etc. So then there is accountant and then there is store manager. And this is how their salary will grow. And then we have maintenance, electricity, water, and miscellaneous expenses. And they will grow at 5%, 2%, and 3%. So let's put this in Excel. I'll go here and copy this and we'll paste it here. Then salary, we'll go here, copy this and we'll paste it here. Okay. Now let's calculate these expenses. Give me maximum of this previous year balance into 1 plus growth rate. Growth rate is 5%. I fix only the column because I'll be copying and pasting this data for electricity, water, and miscellaneous expenses. So give me previous year figure or give me this. And I fix column for this as well. Bracket close, enter. So let's see, is it working? Yes, it is working. But if I paste it here, I'll still get some amount. I don't want this. So I'll put if this date, I freeze the row, is more than start date, I fix it, then give me all this, otherwise give me 0. Okay, this is done now. Okay, now I can copy this and paste it and I'll get all my other expenses as well. Now let's prepare salary. In this input sheet, I have this data. This is what will be salary per person per year. So if someone is going to join me in 5th year, I'll not pay him 2,40,000. I'll pay him 2,91,000 inflation adjusted amount. So this is salary per person per year multiplied by number of persons into like per shift into number of shifts. This will give me total salary. So if this date is more than this date, I fix it. If this is true, then give me salary per person multiplied by number of person per shift into number of shifts. This will give me total salary. Otherwise give me 0. Bracket close. So I've only freeze the shifts part. Enter. Yes. This is working perfectly fine. I can calculate total indirect expense. This will be sum of this. Enter. And then I can calculate EBITDA earning before interest, tax, depreciation and amortization and EBITDA margin. This divided by this. Oops, that will be EBITDA margin. Let's calculate EBITDA first. GP minus this. Copy paste. Okay. And EBITDA margin, it will be this EBITDA by sales. Enter. Copy, paste. Format painter, and we'll put it here. Okay, perfect. So when we were going through this Burger King DRHP, it said store EBITDA is around 13 to 15%. So we have broadly taken all the assumptions correctly. Now what is happening is, since we have assumed all the cost on higher side, our profit margin estimates are coming on the lower side. Okay. Now I can complete this P&L. For that I need depreciation. I don't have these figures right now. So I'll just put it here and leave it. I'll arrive at EBIT. EBIT will be EBITDA minus depreciation. Copy, paste. Then we will say less interest. There is no debt, so there is no interest. Then we'll have PBT, profit before tax. Whatever this is, minus the interest. Copy, paste. Then we'll have less income tax. This is going to be this figure multiplied by tax rate. Tax rate was 25% something. 25.17%. Enter. This will become PAT, profit after tax. This minus this. We can calculate net profit margin, Alt HBD, and NP margin. This net profit divided by sales. Enter. Copy, paste. Now this margin is still going to go down because we'll put depreciation expense. This is pending. Okay. So for depreciation expense, I'll need fixed asset schedule. So I'll prepare fixed asset schedule now. We're done with this. Only P&L, like in P&L, only depreciation is left. Everything else is done. So you can do some like decoration of the sheet. Okay. Rest of it is fine. Now let us prepare fixed asset schedule. Okay. So before we move ahead, let me give you a brief snapshot of whatever we have done till now. So let's understand this. We started with assumption sheet. From this assumption sheet, we read all these assumptions. We prepared details for rental options. Then we started analyzing McDonald's franchisee. For this, we prepared revenue. After revenue, we are done with P&L. In P&L, only one line item is left, depreciation. To calculate this depreciation, we need fixed assets. Okay. This fixed assets will flow to balance sheet. After this, we'll be done with balance sheet. and whatever data we have from balance sheet, using which we can produce cash flow statement. So P&L and balance sheet combined can help us to arrive at cash flow statement. Okay. And after this, we will analyze McDonald's franchisee business. Okay. So let us continue. Let's go to our input sheet and let's see what all do we have. These are the assets that I have. I'll copy this. I'll press control page down and will paste these names over here. I don't need what the cost over here, so I'll just remove this cost. Rest of it is fine. Okay. So I'll prepare a format first. This is very important. See, other than teaching you how to prepare financial model, the ultimate aim is how to prepare financial model most efficiently, right? So I'll teach you some jugaad how to do this. For this, we need format ready. So we'll say this franchisee and paste it, bold, underline. Then we'll start preparing the format. Opening balance, add purchases, less sale of, not the regular sale of franchisee or any asset. This will remove that from our balance sheet. This will give us gross block. From this gross block, we are going to subtract accumulated depreciation. This will give us net block. Alt-H B P, Alt-H B D. Okay. Now, listen to me carefully. Can I say every time when I'm going to prepare this, opening balance will be closing balance. Opening balance will be equals to closing balance of last year. Yes. So I'll copy this, paste it. Purchases, we will bring in sales. There is no sale information given in this case study. So here putting in 0. Gross block, can I say, will be opening balance plus purchases minus sales. Yes. Copy, paste. Accumulated depreciation. Let me explain this with the help of example. Let's say I purchased assets of 100 rupees. This year depreciation, can I say, will be this balance plus this balance minus this balance. There is on this gross block, I have to, let's say, charge 10% depreciation. This is going to be this year's depreciation. Next year depreciation will be again this. If I want to calculate total depreciation that I've accumulated till now, can I say this will be equals to this plus the previous year balance, total accumulated depreciation 20. And I can drag it like this. If 10, 10, 10 is the depreciation that is being charged every year, by the end of 5th year, total depreciation should be 50 accumulated. Okay, we have charged it in 1. If I put the same thing over here, it should be 50. First year end depreciation will be charged, right? So this formula is correct. We just need to link it to the original figures. Like 10%, 10% I cannot hard code over here. So I'll just leave it blank right now. Whatever is the original figure, accumulated depreciation, we'll calculate later on. But we know the formula, it is current year's gross block into some percentage plus the last year's balance. Okay. So I'll just leave it blank as well. Net block will be gross block minus accumulated depreciation. Okay. I can calculate depreciation amount as well. Depreciation on franchisee. If let's say this year's depreciation accumulated is 10, next year's total accumulated depreciation is 20. So what is my depreciation for this year 25-26? This minus this, right? 10 is becoming 20. So this year's charge is 10. So I can put in the formula. This will be current year's accumulated depreciation minus previous year's depreciation. So why are you not putting in the figures? There is a reason for it. This will just make my life easy when I have to copy paste this 6-7 times. Now the assets are same, like the format is going to remain same, just the amount will change. So what I'll do is I'll just copy the format. Okay, and we'll paste it here. Once, so we are done with 2 formats. We need 6, 3, 4, 5, and 6. Now once we are done with this format, first I'll change the names. Franchisee is going to be franchisee. Furniture, Alt ES V. Alt ES V. I'll copy this again. Alt ES V. Okay. Furniture is gone. Then development and interiors. Let's parallelly also update this part. Depreciation on furniture. Then this will be development. Development. I'll write here depreciation on development. Then we have interiors. Depreciation on interiors. Then we have civil work and then machinery. Civil work and then machinery. Depreciation on civil work and then machinery. Okay. The format is ready. Now see how easy it will become to complete the entire schedule. I have to put in the purchases figure. I'll say simply equals to, go to my input sheet and we'll link this. That's it. Entire thing is populated. Accumulated depreciation on this balance, I'll say depreciation rate for franchisee is 5%. I fix it. This is my this year's depreciation. I need to add the previous balance. Enter. Copy. Paste. 1.5 lakhs depreciation each year. I'm done with one schedule. Then furniture, easy, equals to input 11 lakhs. Accumulated depreciation, previous year balance plus this into 10%. I fix it. Enter. Copy. Paste. This is also done. Then development. It's so easy now, right? Development 50 lakhs. Enter. Accumulated depreciation, this plus this into depreciation of 10%. Fix it, copy, paste. And we are done with almost 50% of the schedule. Then we have interiors equals to input sheet 20 lakhs, accumulated depreciation this plus this into interiors. The cost is 10%. Fix it, copy and paste. Done. Then purchases equals to input purchases of civil work 10 lakh. Then we have accumulated depreciation this into some percentage 10%. This is my current year depreciation. Add last year balance to it. This is also done. And the last part equals to 35 lakhs over here. Accumulated depreciation will be last year balance plus this into this 15%. F4, enter, copy, paste. Simple, right? Now with this sheet, I can complete my P&L. I can also post these balances on balance sheet. Let's firstly complete P&L and then let's move ahead. Okay. So there's a trick that I'm going to use to populate P&L as well. I'll select this. I'll select this. Keep pressing control. Keep pressing control. After selecting that, select this part as well. Keep pressing control and select this part as well. Then select this part as well. And then select this part as well. So you are using mouse. Yes. I'll copy this. All these things are copied. But I've missed this part. So I'll copy this as well. Copy this. Everything is now copied. Control C. I'll go here. I need to put it over here in depreciation. So there's no space. So firstly I'll paste it here and then paste it. Alt ES L for links. Links. See, I got all this data in one go over here. I don't need all these zeros and all. So I'll just delete it. It is all linked from there. I'll make space over here. I'll simply press Ctrl X and Ctrl V. This is done. Alt HHN. I'll delete this. I'll delete this. I'll delete this. And I'll just modify the formulas accordingly. EBIT is EBITDA minus sum of all this. EBITDA minus sum of this. Enter. Copy. Paste. Okay. With this, we complete our P&L. Net margin is around 8.5%. 8.5%. Okay. This is done. Oops. It's stabilized around 9%. Okay. This is done. Fixed asset is also done, but we can post all this to balance sheet. Okay. So I'll go to balance sheet. Firstly, I'll prepare the format. So one side is equity and liability. Another side is assets. Within equity and liabilities, we have equity and then we have liabilities. Within equity, we have equity share capital and reserves and surplus. Sir, I don't think balance sheet will match. It will 100% in one go. I can take guarantee of it. See, what happens is when I was started studying accounts 11th standard, there was one accounts teacher that I had called as Devlekar sir. He used to say, its name is balance sheet. It is meant to balance. It's just that you have for every debit, there is another credit. Or for every entry, there is a contra entry, right? If you are adding something, you have to deduct something and it will match. It will match here as well, 100% sure. So don't get intimidated by size of model. It's very easy and it will match in one go. I can guarantee you that. Okay. Reserves and surplus. And even if your balance sheet is not matching, generally, like it should not take more than a minute or so to identify where you have made error. It could be some linking error, formula error, or maybe you have done some error in which you have partially recorded any transaction, right? So in my case also, I can make linking error, I can make formula error, but partially recording transaction because of my CA background that generally do not happen. That's why I'm very sure about it. Anyways, we'll see when the time arrives. Total equity. Then we have liabilities. There is no debt. Within liability also, we have something called as non-current liability, within which there is debt. And then we have current liability. There is something given in the case study for this. Working capital, indirect expense that will become part of current liability is of 30 days. So outstanding expenses done. This will give us total of liabilities. Alt HBD. Oops. Total of liabilities. And then we have total of equity and liability. I'm just calling it as total. This will be Alt HBD, Alt HBD, Control B. Now see, I've scrolled down. Again, top row is gone. What do I do? Alt WFF. Sir, why you have not done this Alt WFF when you were freezing, like when you stacked sheets together? This command doesn't work on stacked sheets. So you have to do it individually. Okay, otherwise I would have done it. Then we have assets. Within assets, we have non-current assets. Within non-current assets, we have fixed assets. Then fixed assets, we have gross block, then accumulated depreciation, then net block. So gross block less accumulated depreciation. This will give us net block. Then we have current assets. Yes. There is no credit sales done by McDonald's. You eat, you pay, then you get out of the outlet. So debtors or receivable is zero, but there is stock. There will be cash and bank, right? That's it. These two will be there. This will give us total. Alt-H BD. Then total of assets should match with total of liabilities. Let's see. Check. We'll say this balance minus this balance should be zero always, right? If there is mismatch, then we have done something wrong. The mistakes that we were checking earlier. So I'll just highlight it. Okay. Now let's start putting in the data, whatever we can right now. Alt-H BN to remove this border. Okay. Equity share, do we know? Yes, we know equity share capital. It will be whatever we have contributed on the very first day equals to this entire thing is my money, like the owner's money. So 1.56 and it's going to be remain same. No further contribution is there in the form of equity. Reserves and surplus is profit accumulated each year, like just like we are calculating accumulated depreciation, each year's profit. So this year, listen, everyone pay attention. This year, I made almost 58 lakhs, 58, 59 lakhs. Next year, I again made the same amount, almost 58, 59 lakhs. So total accumulated profit, can I say is sum of these two? I have to calculate this. So I'll say this plus the previous balance. 58 plus 58, that is 117 something. Second, copy and paste it. Copy and paste it. This is going to give me accumulated profits. Okay. Total equity will be this plus this. Okay. Then no non-current liability. So debt is 0. Leave it blank. Outstanding expenses is of 30 days. Now I need to explain you something. I'll firstly calculate it and then maybe let me put it in the form of formula. My total expense, like indirect expense, is this much. 28,511,351. Okay. If this is my entire year's expense, if I divide it by 365, can I say this is my daily expense? Yes. Divided by 365. We can divide it by operating days as well, but I'm just explaining it right now. In our case, anyways, it is the same. So I have to divide it by 365 operating days. This is my daily expense. So on an average, I'm spending 78,000 each day in first year. So this expense is there, but I have not paid it. I'll pay it at the end of the month or beginning of next month. So it keeps on accumulating. So I asked my employees to work in the month of March. 1st March, 2nd March, 3rd March, 4th March, 29th, 30th, and 31st March. In between all the dates also, they worked. So they have worked for all these dates, but I have not paid them anything right now. I have not paid them. I'll pay on maybe 1st or 2nd, right? But my balance sheet needs to close on this. This is my liability of last 30 days payable, right? Other than that, I've paid February salary, etc. I've already paid. March salary, other expenses will get credited, bills, etc. will be paid in the first week of April. So this 31 days or 30 days salary or other expenses needs to be paid. So this is my liability as on 31st March. So this is 1 day expense. If I multiply it by this, 30. Okay. So this will become my outstanding expenses, and then like it will simply copy and paste it. It will be simply copied and pasted. Okay. The total liabilities is basically this plus this. So total of liability side is total of equity and total of liability. Perfect. Tell here. Comfortable. Now assets, gross block, accumulated depreciation, net block. See, gross block figure is spread across, right? Gross block, gross block, gross block. It's like this. So we can use a formula over here. I'll just copy and paste the data that we have over here. Now we can use a formula called as sum if, sum if. Sum if, it is asking me range. Basically, I want to add all the gross blocks. Range. I'll go here. I'll give it this as a range. And I fix it. Criteria. In this particularly, if you find in a word called as gross block, then add it together and some range. Add to what? I'll select this. In this particular row, if you find something that is called as gross block, add all these numbers together. Basically, I'm saying add 35 lakhs, add 10 lakhs, etc. And this will shift from D to E when I copy the formula from D to E. So I need to fix the rows, but I don't need to fix the columns because D will become E. Bracket close, enter. Was the investment 1.56 lakhs initially? 1.56 crores initially? Yes. So I'll copy this and paste this. I need to fix this cross block as well. So I'll fix this. This should move from 21 to 22. So I'm fixing the column, but not fixing the rows. So I'll copy this and paste it. Now it is working. Accumulated depreciation, copy, paste. All the depreciation that is accumulated. Let's give it a try, whether the formula is working correctly or not. For third year, total depreciation, as per this formula is 47,55,000. If I go to P&L, third year, accumulated depreciation. Oops, I need accumulated depreciation. So this one together. 4755, right? Total depreciation till now. Then net block, copy, paste. Okay. If this formula is working correctly, this minus this should be the answer of net block. Is it matching? Let's check. Yes, it's exactly matching C, right? So you can use this formula. I'll just make it bold. Then stock and cash and bank balance. Cash and bank balance will come from cash flow statement. We cannot put this right now. Other than this, stock. Stock is my basically food material, packing items, etc. Equals to, if I go to P&L, I'll select COGS, enter. Can I say this is my entire raw material plus labor? So when we are discussing stock, it is raw material, like work in progress, finished goods, and the raw material. Everything combined. This will come from COGS. In 1 year, my total inventory consumed COGS is 2.15 CR. If I divide it by 365, can I say this is my 1 day stock, 1 day stock, 1 day COGS multiplied by 7? I fix it. This is going to be my 7 day stock. This is left with me. So on 31st March, I'll be left with 7 day stock. That 7 day stock will be worth 413820. Got it? I'll copy this and paste it. Let's put in together total now. Total will be net block plus stock plus cash. Is it going to tally right now? Answer is no. Copy, paste. But I know now first year cash to make it tally should be 9399600. If this happens, then only my balance sheet will tally. So almost I need 1 CR of cash, right? Almost 1 CR. It's not exactly, but almost 1 CR. 94 lakhs approximately. Okay. Let's see. For that, we have to prepare cash flow statement. Let's start with cash flow now. So firstly, I'll prepare the format as usual. See, preparing a format, at least while teaching, the reason why I do it is this gives you a box within which you have to think. Otherwise, you could be going anywhere, right? So this format gives you, okay, this is the solution I need to arrive at, or this is the number I need to arrive at. Now, what could be the formula around it? Okay. So that's why I prepare format, and this is something that I'll recommend you as well. So operating activity, then leaving couple of lines, we have investing activity, and then leaving couple of lines, we have financing activity. All WFF. Then we have total cash generated during the year. This will give us closing balance, but before that, we need to add opening balance to it. Add opening balance of cash. This will give us closing balance. Alt H B D. Operating activity will start with PAT, profit after tax. Add non-cash items. Non-cash item that we have is depreciation. This will give us cash flow from operation before working capital changes. Yes. Alt H W to make it look good. This will give us, after this, what adjustment we'll do? Yes. Add or less changes in working capital. So add increase in current assets and decrease in current liability. And less, just opposite of it. Less, decrease in current assets and increase in current liability. Okay. Okay, perfect. This will give us total cash flow from operations. Okay. Let's try to prepare this and then we'll move to investing. PAT is easy, equals to, we'll go to P&L and we'll link PAT. Okay. Non-cash item, there is depreciation. See, this we want to calculate cash flow from operation. Depreciation doesn't take out any cash flow away from us. So we are going to add it back. So we can say equals to sum of, we'll go to P&L, this, enter. This will give us before impact of working capital, cash before impact of working capital. Now, this is where a lot of students find it a bit difficult. So, see, this cash, or look at this profit is not entirely in cash. One thing is, I've subtracted depreciation, that's a non-cash expense. Even before it, there are some non-cash expenses hidden. Like this, I've not paid. I've paid it on the first day of the next month. On 31st March, they are outstanding. So out of this figure is outstanding, right? Similarly, in this COGS, there's some stock that is still left with me, right? So general thumb rule is when assets goes up, the cash goes down. Like you bought a mobile phone, so your asset balance will increase, bank balance will go down. When liability increases, bank balance increases. Take a loan, liability increase, bank balance increase. So same logics we have to apply over here. Increase in current assets and decrease in current liability. Increase in current assets. If the assets have gone up, that means I've purchased something, like stock have gone up. Stock has gone up, that means I have purchased stock. I've purchased stock, that means I've paid cash for it, right? So payment is outflow. And then we have decrease in current assets. Decrease in current assets, let's say I've sold my stock. So my stock balance have gone down, but at the same time, my cash has came in, right? So increase in assets and decrease in liabilities works in the same way. Like here, increase in current assets, decrease in current liability. Let's say expense was 1 lakh, I paid that. So outstanding expense was 1 lakh, I paid that. So now that balance is gone from my balance sheet and my bank balance have also changed. Okay. So let's do it. Equals to, with a minus sign, bracket open. I'm dealing with assets. This balance minus this balance. Bracket close. Closing minus opening. So see, I was having stock of 413. Now I have stock of 480. What does that mean? My stock balance have gone up. That means I must have purchased it. That means cash has gone away from me. So it will be showing me this. Cash has gone away from me, right? Then decrease in current assets, increase in current liability. With a plus sign, this balance minus this balance. Liability and cash have positive relationship. Think about it. What has happened is there was no liability over here. Now you have to pay someone 23 lakhs. That means you must have taken service or something. That means you have received 23 lakhs in the form of service or in the form of cash. So liability have gone up. That means cash have came in. Therefore, it will be a positive balance. Copy, paste. So I've made a small mistake. This should be over here and this should be over here. This is increase in current liability and decrease in current assets like this. Increase in current assets. I've made a small mistake. This should be less and this should be add. Rest is fine. Increase in current assets, we are subtracting, so less. Okay. Total cash flow from operation. This plus this plus this. Have you seen this figure before? This. We have seen this figure before. Okay. Okay. Let's move ahead and let's prepare investing activity. So this is purchase of assets. We purchased a lot of assets. I'll copy this and can paste it here. I'll just move it here. Then we'll go back and copy it. These are the assets that I have purchased. Equals to this balance. That's it. This is the asset that I have purchased, but with a minus sign because cash is going out. Copy, paste. There are no assets purchased after this. This should be total equity contribution 156. Let's check. Total cash flow from investing. Equals to sum of this. Copy, paste. Perfect. Then financing activity. There is only one thing, that is equity contribution. Equity share capital equals to balance sheet. This year balance minus last year balance. If in case this balance is going to increase, that means I have done contribution. For example, let me copy paste this. Now look at this. I'm saying in this year, I contributed 1 more lakh rupees in the form of equity. Okay. It should be visible over here. See, it is now visible. Okay. So it's current year balance minus previous year balance. We can link this also with balance sheet. Yes. So you can say simply it's the same thing, equals to minus current year gross block minus previous year gross block. It's going to be the same thing. Okay. Because we are taking these assets individually, we have not done it like this. So total cash generated during the year, whatever came in the form of equity was invested in the assets. So only this was generated. So this plus this is 9 399,600. Opening balance of cash will be always last year's closing balance. Enter. So closing balance will be this plus this. Whatever I earned plus whatever I had. So now let's all pray to God that our balance sheet tallies. Anyways, it will equals to, I'll link it with this closing balance. And it is tallying. Let's move ahead. Let's copy this. Okay. Let's copy this. Okay. And let's just hope the balance sheet tallies. Will it? Let's maintain that suspense for some time. Let's do the formatting of this sheet. Alt-H BP. Alt-H BP. Control B. Okay. Let's go and check. So balance sheet is not telling, it will not. Let me copy and paste. Now it is. Told you, it is meant to tally. Alt-H N. Alt-H FS. 9 is the font size for check. This is done. All good till here. Easy. Very easy till here. Right? Easy. But by preparing this, you're still not able to arrive at a decision. Decision of whether to invest in the McDonald's business or give the property on rental. For this, we need to analyze this, right? So let's start with the analysis. For that, I need to explain you a term called as free cash flow, FCFF and FCFE. So free cash flow. Firstly, we'll discuss to firm. In this case, there is no debt. So free cash flow to firm is equals to free cash flow to equity. Firstly, let's understand free cash flow. See, company received some amount, right? Sales. It will firstly do its operational expense. Sales minus expense. Basically, operational expense is EBIT, right? Can I say this is profit before tax of firm, not debt, not equity combined? Yes, it is. On this, if we end up paying tax, can it become profit after tax of firm? Operating profit. This is operating profit, right? So this is also operating profit after tax or net operating profit after tax. This is called as NOPAT. So this money is after doing your operational expense as a firm. Now what will you do? You will do capital expenditure. From this, one use is to deploy money for the purpose of growth, do capital expenditure. After this one more thing is missing over here, working capital adjustment, because sales could be on credit. Expenses could not be paid right now. So you need to adjust for that. So changes in working capital, the way that we have done in CFS, it's the same thing. We have to arrive at cash flows, free cash flows, cash flows. Why it is free? Because it is after your growth investment, after your regular expenses, and after your working capital adjustment. One non-cash item still there in EBIT, depreciation. I need to add it back. Once I do this, I'm able to arrive at something called as free cash flow. And this is discussion at the firm level, so it will be called as free cash flow to firm. Okay. And then if there was debt, like whatever is the claims of debt providers, we'll subtract that. we will be left with whatever belongs to equity. Okay. So this becomes free cash flow to equity. We don't need this because there is no debt over here. This and this figure is going to be same because this is 0, right? So you have to calculate that net and net, how much I invested and how much I got back. Simple. Okay. So let me put it aside. Oops, I missed on this. So let me zoom out and then select and put it aside. This is fine. Let's start putting in the data. So we arrive at EBIT. EBIT. EBIT is operating profit of the firm after tax. I'll enter the comment over here. Insert a comment. Insert a comment. This is operating profit before tax of firm. Okay. Let's put this data equals to, could be easily found in P&L. Okay. Then less taxes on this figure. You have to multiply 25.17%. Can't we put that income tax figure like that is on P&L? No, you cannot. No, you cannot. Okay. In this case, go here, check. It's going to be the same. But if it was interest, like there was interest, these figures will not be same. We want profits at the level of firm. So consider payment of interest as 0 and you calculate profits after tax at the firm level. Firm's profit after tax. So you can't do it. This is there. Then we have, this is NOPAT, net operating profit after tax. This is profit of the firm after tax. I can even copy this and paste the comment, Alt S, and I have to paste the comment. So Alt S C and enter. Okay. So you'll see the comment is now pasted. Can edit the comment as well. Edit comment, profit of the firm after tax. Simple, this minus this. Okay. Done till here, easy. Now let's move ahead and let us put in depreciation, capex, and working capital adjustments. So let's do it. Firstly, depreciation. Add depreciation. Easily can be sourced from cash flow statement. This one. Enter. Okay. Perfect. Then changes in working capital. Add less changes in working capital. Add less changes in working capital. So this is going to be equals to sum of These are changes in working capital. I'm just going to add them together. These one. Increase and decrease was there, na? Previous. So this is change in working capital. Then capex. Okay. We are spending almost 2 lakh rupees per month in the form of maintaining the assets. Therefore, there is no lot of capex that we have assumed going future. Otherwise, every 2-3 years, restaurant need to update their interiors, etc. But for MACD, it will work. So capex is not at the end of first year or second year or third year. It's a beginning. It's at the beginning of 1.56 CR. Maybe let's link it from input sheet. Okay, perfect. This will give us free cash flow to firm and equity. In this case, it's same. Alt-H BD, FCFE slash FCFF. It's the same in this case. This plus this plus this plus this. Copy, paste. Is there anything that I've missed? Anything? Yes. One is my business is not going to stop over here. It's going to continue to generate the profits, the cash flows, right? Number one. Number two, there needs to be opportunity cost. We have discussed this earlier as well. For starting this McDonald's business also, there is opportunity cost. I have to sell the assets or I can hold it. If I hold it, I can start McDonald's business or I can lease it out. So when I have to do this, I'm letting go of not receiving 4.5 CR. If I'm doing this, I'm not like if I'm doing this, then also I'm letting go of this. So when we were analyzing rentals, we considered this opportunity cost. The same thing needs to be done over here. I'll just erase this and we'll enter opportunity cost. Purchase offline. Equals to with a minus sign 4.5 CR. Alt-H K, Alt-H 9, Alt-H 9. Okay. I'll just add this part over here. There's still one more thing missing. If I just calculate IRR over here, there's going to be one fundamental problem. I chose pastel yellow over here. So I'll paste the format over here as well. If I just calculate XIRR, these values on these dates, what am I missing? And this should be my bad with a negative sign because we are investing this. I'm getting negative 7.5. Why? Because I've not calculated terminal value. Perfect, perfect. I need to bring in account terminal value as well. Yes. I'll add terminal value. Okay. So now we have to calculate terminal value. So terminal value calculation could be done using two ways. You discussed it earlier. The two ways are exit multiple and Gordon growth. The previous time we calculated using exit multiple. Now I'll be calculating using Gordon growth. Okay. So terminal value basically meant all the future cash flows brought to the end of fifth year in this case. Gordon growth model, the formula is value at the end of fifth year will be equals to free cash flows at the end of sixth year divided by KE minus G. KE minus G. KE is cost of equity, G is long-term sustainable growth rate. That is, in this case, 5%. So let's put in the formula. It is given in input sheet as well. Okay. So let's put in the formula. This is basically AP-GP series. If you are good with maths, you can decode the formula. It is A by R. Let's calculate terminal value. Equals to next year's cash flow. This multiplied by 1 plus long-term growth rate. This is my next year's cash flow divided by, in brackets, KE minus G. Sir, how are you getting this 18 and 5%? 5% sales have peaked out around 5%. 18 is basic cost of equity. Like that is 13% plus 5%. Enter. Some 8 crore something. I'll tell you what does it mean. This means if someone comes to me and say at the end of fifth year, you're almost generating 1 CR, take this 8 crore and give me your business. I'll be able to hand it over to you. Okay. Not the land, just the business part. This is not analysis of land. Okay. Just the business part. Or if someone wants to arrive at EV by EBIT multiple. So this is as good as EV divided by EBIT. That is almost 7.5 times EV by EBIT. Right. Someone can arrive at EV by sales. This is EV. Sales, we can go here. This is sales. These are not startups, so they don't go 3-4 times of the sales. Okay, 0.84, slightly on lower side. You can play around with these numbers, but it cannot be more than maybe 1, 1.2, 1.3, 1.4 of sales. Okay, terminal value is done. Now total FCFF, FCFE, voltage BD will be this plus this. Control V, Control B. And in my XIRR formula, I'm going to shift from here to here. And let's see what's the answer. It's 19.9%. Okay. If I go and check rentals, it's 19.2%. 19.9 versus 19.2. The margin is not very wide, but still, if we have to go very objectively, which one will we choose? We'll choose this McDonald's franchisee. So I'll tell you briefly about it. See, I have suppressed the revenues as much as I could, and I have elevated the cost as much as I could, right? And after this, I'm arriving at a decision that says go for business instead of renting out. Just playing around with the numbers. I've taken growth in APC around 5% on lower side. If I just move it around 7-8%, normal inflation rate also, it will make a huge difference. Okay. So I'll go here. APC, I'll just make it 8%. Normal inflation rate. If I go here, it have changed drastically. In this case, it's clear cut, right? So whenever I'm analyzing a project where I have to put in the money, I'll be bit optimistic about revenue and more like pessimistic about revenue and optimistic about higher cost. And even after doing that, if the business is saying it should be accepted, then and go and ditch it. Okay, you can play around with it. 5%, 6%, 7%. You can play around with it. If I change it to 7%, look at this IRR, very high. Okay, profit margins, etc., will also change a lot. Okay, so I'll bring it back to 5. I'll go to output and I have to take decision here. All this data is not required. Alt H N, and I am saying McDonald's IRR and rental IRR. McDonald's IRR is 19.9%. Rental IRR is 9.2%. I'll say decision decision if this is more than this, then give me go for McDonald's. Otherwise, give me go for rental. Bracket close. Should be here. Okay. So this is the final decision. Go for McDonald's. I'm just going to give it some color so that it looks good. Okay. We are done with everything. This is the final decision that we have to take. I'll just do some decoration of the sheet and then we will be ending today's session. Okay. So I'll just write here so that if someone is inspecting the sheets, they know beyond this point data is not given. So Alt H and then some color that immediately draws attention, but it's not very like aggressive. So maybe something like this. And write here end of sheet. Bold, italics, or you can choose any of them. Will reduce the font size. Alt H FS 9, enter. I'll select this, copy this, and I'll keep on pasting it individually in each sheet. This is already there. Rentals, I'll paste it here. Revenue, I'll paste it here. P&L, I'll paste it here. Fixed assets, I'll paste it here. Balance sheet, I'll paste it here. Cash flow, I've pasted here. This is also done. Okay. Now I'll just check whether I have left any formatting that is to be done, etc. And then we will close today's session. So like when I was going through it, I saw some red colors unnecessarily. I was explaining something, that's why I did it. Now I don't need it. Similarly, revenue, I don't need these blue boxes. Alt H FP, format painter, and we'll put it here. This is gone. I'll make it bold. And that's it. This is entire financial model of whether you should be going for McDonald's or whether you should be leasing the property. Answer here is McDonald's franchisee. The assumption here was owner is not involved on day-to-day operations because everything will be managed by a manager. So this is the answer. We can create now a final report that says we will recommend to go for second option, that is starting McDonald's franchisee. Give your reasons, give the risk involved, tell what are the pros and cons of going against it. A good 4 or 5 pager report, and we are done with the entire project. We are doing report writing right now. It is a tedious process, but you can do it on your own. Try to do it, and you can also try to share your model, whichever you prepared after this, watching this video, along with reports at info@quintedge.com, and we'll be more than happy to go through your models. So till next time, bye bye.